Alright, guys, what is up? I'm still here. I'm still showing up, but I am a little late. Unfortunately, right? I am a little bit late. And you know what, guys? I'm human. I. Last night I was already feeling so tired. I don't know if you guys could tell in the market recap, but I was feeling so tired. And I mean, I'm just like working all day, and then I'm also trading, and I'm also trying to make videos and back test. And guys, it just you know gets exhausting. You just get tired. But the most important thing is I show up for my live trading window. Now I know I'm a little late, but I am here. Today is the day before NFP, so it's important to keep that in mind. But I'm gonna keep showing up. I know I'm a little tired. I know I'm a little out of it, so I am going into the market somewhat defensive today, which is perfectly fine. I don't really see anything wrong with just going into the market a little defensive and not necessarily gonna take anything. Right? I want to. Oh, we do actually have high impact news today. That's something that I did not realize. So I'm gonna screenshot this, right? So yeah. Anyway, here we go. Thanks, Hyper. Appreciate it, man. You did it for me. So yeah, Hyper already put news. Um. So let's go ahead and just take a look at what we got going on this morning, right? I'm gonna pull over to this chart here. Once again, guys, I am going into the market super defensive today. If trading got banned tomorrow, that'd be crazy. Okay. Why are you going into the market super defensive today? It's just the day before non-farm payroll. And also, if you can't tell, I am on the charts a little late. And I'm aware that, I might not be able to trade at my fullest because I'm a little tired. But if I see something that I think is a good opportunity, I could possibly take it. I just genuinely, I am a little tired. But, yeah. It is the day before NFP. Okay, what was I doing? Lost my train of thought. Oh, yeah. We're gonna take a look at what we got going on. So, yeah. Oh, I gotta get out Tradeovate and figure out what accounts I would be trading if I do take a trade. So I'm just gonna pull this up. Will you trade tomorrow? Yeah. I mean, guys, I show up and try and show up every single day. Some days, I'm a human being, so some days I might not be able to, uh, provide my fullest capability, but I'm still gonna show up. Like today, I feel like I'm just a little out of it, but I'm still here. I'm still gonna show up, and you know what? I'm actually thinking I'm hopefully gonna start being able to lock in a little bit more as the session progresses. So, but yeah, I'm gonna trade tomorrow, and just keep showing up, guys. mean, as always, though, you guys know the drill. Like, we're like all a team. Like, you guys see what I say and then use it for your own benefit or to decide your own trades, right? That's the cool thing about, us all being traders is you guys can use the knowledge from my videos and take your own trades. And the knowledge from, watching, ICT, Dodgy, right? You can use that knowledge and formulate your own trades. And so, that's the hard part about watching someone else is because if they're having an off day, you could be feeling right in your prime and you're probably going to trade better than them, right? So you guys got to trust yourself. Trust that you guys do know how to trade and execute based off of a trade that makes sense to you, That's actually kind of smart, man. That's actually kind of smart. I wonder if anyone's doing that with me. It'd probably be profitable, at least temporarily, right? But guys, I'm gonna get back on my grind, and I'm gonna start taking some good trades here. I think lately the reason I've been taking such bad trades, I put this on Twitter recently, is lately the reason I've been taking such bad trades is because, like, it's not that I can't. I've gotten to the point where I can walk away after a loss. I can, I'm able to have the discipline to walk away after a loss. I've got that part pretty much handled down, right? The part that I need to work on is being bored part. The part where you sit and do nothing and let trades come to you instead of going to the trades. And I think that's probably my biggest issue is I will analyze the chart looking for a trade when actually there's nothing to do, right? There's no opportunity. There's nothing I can do. I need to just be waiting for the trade to come to me. And obviously easier said than done, but yeah. But I did post that on Twitter the other day. I think that's probably, one of my biggest struggles. So, okay, I got Tradovate pulled up. Let me get out my notepad. If we do trade accounts today, let's figure out what accounts we'll be trading. So, funded, looks like we'll be trading funded 2, funded 10, funded 13, and both the evals. Respectfully, it's because you're having too much fun marking out confluences. What I did practice myself is just mark out the confluences and liquidity. Yeah, I agree, man. It has to do with that for sure. Well, you also, like, I don't know. I've been profitable in the past. A lot of it has to do with just, me being bored and waiting for setups to come to me. I totally agree though. Right? Okay. So if I do take a trade, it's gonna be funded 2, 10, 13. Like I'm funded still. I have most of my fundeds. So it's not like I'm a terrible trader. It's just recently I've been trading terribly. Recently. All right. Okay, funded 2. It's hard because you're always gonna make up an excuse, right? Like, why am I trading bad? But I think I am trying my best, and that's all I can do, and just keep showing up. But I do think it has to do with me, not letting the trades come to me. I think that's a big part of it. But guys, think about it from a perspective of how long did it take JCap to become profitable? 10 years, right? How do you have so many of them? Because I'm a good trader, dude. I'm a good trader. I just it's just I'm having a weak period, I think. You know, you kind of start to doubt yourself after you take quite a bit of losses, but you know what? You can't doubt yourself. You gotta understand, you do know what you're doing. Just, you know, recently you've been taking some bad trades, and that's all it is. I mean, yeah, I've gotten funded on, look at this, 10 accounts, dude. But I'm only trading 3 of them at a time right now. But you can see, like, you know, how bad I've been trading, right? All of them are at risk right now. So yeah. Like I said, guys, I want to be defensive. I don't really feel like I'm not in the mood to lose accounts today. Just not in the mood to lose my accounts today. So let's just focus on not taking a loss, right? It's the main thing right now is let's just not take a loss. If we see something light bulb, then okay, sure. But let's just not take a loss. That's the goal. Go into the market not taking a loss. So, yeah. Okay, funded 2, funded 10, funded 13, eval 41, eval 42. So, one account, 2, 10, 13, 4 on 41, 4 on 42. I mean, keep in mind, I've been trading for, this is going to be tomorrow's like the 2-year mark, literally tomorrow. So, I've been trading a long time. I do know what I'm doing. I just, you know, I'm a human being and I struggle like anyone else. 2, 1 account, 10, 1 account, 13, 1 account, 41, 4 accounts, 42, 4 accounts. Okay. So, okay. Let's figure out what we got going on here. London highs are all the way up here. Asian lows are down here. We have a gap, new day opening gap down there. I might just put these confluences on my other screen, actually. Yeah. So I'm just going to put these on my other screen. So We actually could get something today. Oh, looks like someone said something. Snowman. Good morning. Good morning, Snowman. Yeah, bro. Like I was saying, I got on the charts a little late today, but we're slowly waking up. We're slowly locking in. We're still gonna show up. It's unfortunate though because, yeah, I got on the charts a little late. I missed the gym, and I was just feeling a little bit of burnout. But I'm still gonna show up. Still gonna be here. And yeah, we may or may not. We'll see. We'll see what happens today, right? I'm gonna go in the market a little defensive because, I am feeling a little burnout, a little tired. Don't want to take a loss. That's the main thing for me right now. Looks like we're possibly drawing down to this opening gap. So we swept out these highs with SMT. Guys, it goes to show there really is always opportunity to every single day. I mean, look at how, right, we sweep out these highs with SMT so obviously, right? I mean, there really is opportunity every day. It's just, a matter of can you catch it? Can you catch it? Oh, wow, we're already at Asia lows. Right? This is, accumulation. So honestly, at this point, if we do get a move, I think the move we'll probably come back to this range, but looks like we've already started to move down. Right, SMT with this high. Yeah, we're already at the new day opening gap. That's crazy. You guys see how obviously this was accumulation, manipulation, distribution, though? I mean, the market is just moving so systematically. So, yeah, going to the market defensive today. If we do get something, it might be to go run back up to this range, maybe later on, but Look at that. Bang. Use the range projected out half a standard deviation. What do you get? The exact high, right? That's why range projections are really, really nice, guys. Utilize these range projections. So then we go down 1, 2, 3, 4, 5. Wow, 1, 2, 3, 4, 5, 6. And then that gets hit perfectly. Wow. That's pretty cool. That's pretty cool, guys. I'm wondering, was there a key level within here? Was there a way to take a trade? Did you guys see any trades within here? Was there any trade opportunity? I mean, there's change state delivery here. And honestly, guys, I'm at the point where I really do think that you can just take change state of deliveries without having the higher time frame key level, because it's literally just running liquidity, right? It's the same as an inversion. So as long as I have AMD, in my opinion, there's really no reason why you shouldn't be able to take a change state delivery, because it's all a game of liquidity. That's so sick. That would have been a cool trade. Okay. So I'm gonna record these in the change state delivery trades without like a key level. I'm gonna record these as change state of delivery instead of flow state. I'm just gonna call these change state deliveries. Because once again, I really do personally believe the market is just highs, lows, and entries, and so as long as I've detected the AMD, in my opinion, there's no reason why I can't take a change state delivery. Because I know how these markets move, right? CISD close 9:30. On the 5-minute. So that's one way you could have entered. Actually, this one would have been a lot better. Oh, this would have been fire. Oh my gosh. This would have been so fire. Holy. Good morning, Javier. obviously you could go break even at this swing low here. And once again, the reason I'm doing this is I think you can just take. Yeah, but would you have taken that though? No, because I personally, I'm right. Like I'm still basically right now. I just see the market as highs, lows, and entry points, right? And so I don't know if there would have been a key level. So as of recently, I haven't been taking just regular, just change state deliveries without a key level because it's not a flow state. But I've been thinking about it over the past couple of days, and I really don't think you need a key level. I actually really don't. I think, like, I just been thinking about it over the past couple of days. From my back testing, and like, as long as you have AMD, the market's just highs, lows, and liquidity, liquidity and entry points, right? So yeah, the higher time frame PD rate helps, but I don't think you actually. So I'm gonna be starting now. I'm gonna be allowing myself to take change state deliveries without higher time frame key levels. I'm just gonna be calling them change state deliveries and not flow state. So I'll basically have 4 ways I can take a trade. I have an inverse value gap. I have 2022 gaps, right? So just the regular 2022 model. I have flow state, which is higher time frame key level, aligned time frame change state delivery. And then now I'm going to allow myself to take just a regular change state delivery. So once again, the market is just highs, lows, and liquidity. I mean, from my back testing, I know that. Like, it's literally just a fact, right? So if I can detect the AMD, that's what matters. ES ain't touching the end dog. Yeah, it might not, dude. It might not. But like, just because I probably would not have taken this doesn't mean that this wasn't a valuable trade to observe, right? Because now in the future, I'm gonna know if I ever see accumulation, manipulation, change state delivery like this with SMT. This is gonna be a very nice trade. Now in the future, this is in my mental notes. It's in my mental notes. So yeah, maybe I would not have taken this, but it's in my mental notes now for the future, right? That's the power of showing up to the market every single day and just taking observations, taking notes. We don't need to be perfect, right? But we can just observe and get better. As well, like, we could have taken, theoretically, you could have taken this inverse value gap, anticipating this one to get broken. Because of liquidity. Right, trading is just understanding signatures and price, accumulation, manipulation, distribution, and entry points. And when we're ready to go run liquidity. 920. Wait, this should be 925, right? Yeah, 925. IFVG. 5 minute. So there's probably 2022 model within here because once again, accumulation, manipulation. So now we're looking, now after we get this SMT, we're looking for 1 minute for VI gaps. So actually, yeah, that's exactly what happens. Look at this, right? Break of this low here. So sweep of liquidity, right? We sweep external liquidity with SMT. We break this low. So you can see this is the first sign that we're truly getting algorithmic displacement. That's the first one. Right there. Once again, the market's the greatest teacher, guys. Go into the charts and just observe. That's the market's the greatest teacher. So this break of structure is the first true sign that we're really getting algorithmic displacement, right? Because you can see how this body closes below this. So now, let's draw this out here. Well, now you can see we backtest premium of this for VI gap, which is actually also this volume imbalance, right? The market is the greatest teacher. Let the market be your mentor, right? So look at that. And then measure out the displacement leg. We tap premium of the displacement leg, right? Or you can call it equilibrium, whatever you want to call it. And then look at this is why I actually really love 2022, guys, is because we can get such high RR off of these. And one thing I'm realizing about 2022 is ideally the liquidity sweep is an external liquidity sweep, right? I don't really care so much about the internal one. I care about was there external liquidity, because this is going to be the people that are going to panic sell for a loss down here, right? You need time-based liquidity, not just some random, internal liquidity sweep. I want to see some external liquidity get swept, right? That's the one thing that I'm realizing for 2022 that's really nice, is you want to see for 2022 is when they say liquidity sweep, it's really some kind of time-based external liquidity that you want to see get swept, not some random internal sweep. You guys see what I mean? Like I'm not talking about this internal one, right? I'm talking about on the higher time frame, getting some sweep of external liquidity, then waiting all through this until we obviously break out a low and then retest a fair value gap. Does that make sense? The liquidity sweep, this is something that took me forever to understand, but when you say liquidity sweep, you're really looking at what liquidity pool is going to end up being your counterparty that's going to be your liquidity down here. You have to conceptualize it, right? So these guys, that's awesome, Javier. That's awesome, man. So this is what I mean when I say liquidity sweep now. Like, I'm realizing that over time, as I study the markets more, I'm realizing when we want a liquidity sweep, it should be really some time-based external liquidity, not some random internal sweep. The internal sweep might be very, very slightly relevant, to get that initial pop to break the structure, but what are we focused on conceptually? We're focused on who is going to be the counterparty that's going to panic sell for a loss down here. We have to have a counterparty that's going to panic sell for a loss. So you can see this entire accumulation range is going to be our counterparty to our trade. We got to conceptualize the 2022 model. So I don't want to just see some random internal pop above this high. I don't care. I care about this external accumulation range. So it's really kind of starting to make sense to me, right? And guys, like I said, I'm just learning with you guys, but the more I study, the more the market is my own mentor. You get what I mean? The market's the greatest mentor. So, 2022 model 904. 1 minute. And look at this, right? This is why I'm loving the 2022 model, is look at the RR we can get. Genuinely insane RR. Once we get good at it, the 2022 model is a money printer. We go not even just to the 4th, to the 8th standard deviation, right? And past. Down to Asia lows, that's 13-1. So guys, this is the potential that we can have once we really conceptualize these markets, right? Once we conceptualize what's really going on with them, right? We just have external liquidity get swept, wait for obvious break of structure for a VI gap at equilibrium. 35K on paper? That's crazy. That's so crazy. Okay, I'm starting to get locked in a little more. Here we go. Alright, so this is kind of what I was saying, right? If we are going to get something, I think it will end up being, you know, a move back up to the range. Because now, this is a giant liquidity pool. And this is all a void, right? You guys see why this is void? You guys see why this is a liquidity void? Why there was no traders that were within here besides market sellers, right? So what does that mean? If I measure out this range, it's a liquidity void. Do you see how there's no liquidity within here? I mean, the market is going to basically, when it comes back up, it's going to run back through this void as if it's not there. That's what liquidity void is. That's why when it immediately gaps down, right, it's a true liquidity void because there's literally no traded price action. But this is a like pseudo liquidity void because there was barely traded price action. There was barely, but it's gonna still inherently want to get filled back in. Yes, let's go, Javier. Hopefully that makes sense, right? You guys get why this will get filled because the market's seeking this liquidity next, and this is gonna be non-existent price action. So we might actually get something. Looking like we're getting algorithmic displacement, right? break of these highs. So I think this probably get filled. So maybe, maybe you could take this as an inversion. To go run this liquidity pool. And then, just go break even somewhat fast. We did just get a 2-minute change state delivery. Pretty nice displacement. I'm actually considering trying this. Then again, I don't know. This is why I just like getting market experience, right? More market experience, the better. Okay, now we're possibly gonna come down, and here I would probably consider this a 2022 gap, right? I'm curious how we respond to this. Is this 2022 gap going to be very sensitive and then send us up to the highs? I'm curious. I really am, because I don't know. I'm not going to do anything. Right, now we have a 2-minute fair value gap. This honestly looks like a very clean fair value gap that will probably hold. Like, putting a limit order here will probably be really clean. What do you guys think? Do I take this? I just feel like, yeah, maybe worth a try, right? Okay, I'm gonna go 2 contracts, so 22. Maybe. If we get good displacement, I'm probably going to try 2 contracts. Stop loss below the 2022 gap. Now, I'm not entirely sure. Okay, I'm gonna do it.
Order filled.
Oh, this could be a mistake. In the trade, whatever, it's fine. I'll go break even if we re-break the internal high. And I'm gonna probably, if we do come up here, I'll replace TP with trailing. I'll keep TP1 and then I'll replace TP with trailing on this other half. If it does happen. Okay, if we break this high, what's gonna happen, or what I'm gonna do is I will go break even, and then TP1 would be at this low resistance liquidity or the liquidity pool, and then I would trail the other half because I think this low resistance liquidity would be rocket fuel for us to continue higher, right? So that's my plan. Hey, what up, Medbach? I don't. Conceptually, this trade is cool, but execution wise, I messed this up big time. Like, I should not have taken a 1 minute inversion. That was not smart, but conceptually, like, I think this is the right concept. It could work out, but I definitely should not have taken a 1 minute IFG here. Yeah. I messed up, dude. I messed up. We're gonna have to sweep the low again, huh? Yeah.
Stop field.
Oh, I knew that was a bad trade, dude. This is gonna work, dude. I don't want to take it because it's against my rules, like, genuinely. Because I already took a loss. But this is gonna work. That was a bad trade. Oh my gosh. Why do I keep taking bad trades? This is gonna work. This is gonna work. I'm so upset, man. I'm not taking it. Because I know, if I allow myself to break the rule, then, well, in the future, then it's gonna just make me lose in the long run. So I know this is gonna work though. Obviously, right? This is obviously gonna work. This is a good trade. I'm honestly I know that I shouldn't take it, but I might actually just enter it. I just took a really bad trade, dude. No, dude, I can't do it. If I take this trade, then it's gonna cause me to tilt in the future. Cause then it's gonna say in my brain, okay, you can take trades after you lose. So I literally can't take this trade. Oh my gosh. Such a bad trade. Okay, I'm gonna close out trade of vape. I'm not taking another trade. I mean, obviously I'm sad. Like, I just took a bad trade. I took a bad trade. I got what I deserved, dude. took a bad trade. I'm gonna go on a walk. Like, that trade probably would have been okay if it was like a 5 minute, right? But it was a 1 minute. Just a bad trade, man. Just a terrible trade, dude. Terrible, 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 terrible. It's a terrible trade. It was just such a bad trade. That was literally like one of the worst trades I've ever taken. You know what, though? You know what, though? I am proud of myself. Like, whatever, man. I took a loss, and I'm accepting of it. I'm not going to tilt. I almost took another trade, and guess what? I didn't, right? Even if we were going to inverse that. You know what? No more trades, right? Yeah, I took a loss, bro. Dude, I took a terrible trade. I took one of the worst trades I've ever taken. So, Hyper, you are not alone. Took one of the worst. Genuinely, that was one of the worst trades I've ever taken. But you know what? I'm disciplined. I'm done for the day. I'm accepting. It is what it is. Goes to show, guys, we're all human. We're just making, here as traders, making mistakes and moving on. I want to see this get embers and then go break even here. But, like, I know in the long run, if I can just control myself after losses, that is going to make me profitable. So, obviously, I'm really sad. Obviously, I'm, kind of depressed about it. But I know that if I can just control myself after losses and not take a second trade, it's going to give me success in the long run. Because I know how to trade. I just make bad decisions a lot. I feel like that was a good trade. But, I mean, the reason it probably failed is just because it's not in discount. But I've also seen it work where it's not in discount. So I'm not one to say anything, right? Because I've also seen it work where it's not in discount and it ends up working out. So, I don't know, to be honest. Your trade was better than my trade, that's for sure. I think we're going to go back down to this low now. Oh, you know what happened? You know what happened is if I draw this over, we're back testing this. And then we broke this low. With displacement. So yeah, obviously I'm sad about this, but it is what it is. I know, I got induced. I know. I'm an idiot sometimes. I'm an idiot. Sometimes. Oh wow, there's a 1 minute inversion. This actually is decent. now. Oh, you know what? This is gonna fail. We had to close above this volume imbalance. Do you see that? How this inverse for value gap is right here, but it includes a volume imbalance? Because it includes a volume imbalance, this is gonna fail. Because, yeah, we need to close above the volume imbalance too. So this is gonna fail. We have to close above this. We might end up closing above it still, in which case I'll just get lucky. You know, we have to realize, Hyper and Javier, we just have to realize so much of trading, you're going to just end up doing stupid stuff. You're just going to end up doing stupid stuff. As much as you don't want to, you're going to. And I hate it. I hate it that I do stupid stuff. But it's about how can you control yourself after you do the stupid stuff. Because the stupid stuff is not really that stupid unless you do something stupid after the stupid thing. Because I almost did something really stupid, which was, you know, take another trade after the loss. That would have been really stupid, right? If I had done that, objectively, that would have been much, much worse than the initial loss. And so, yeah, the trade sucked. Yeah, it was a really bad trade. But had I continued to trade, would have been way, way, way worse. So once we hit that fair value gap, I'm going to go break even. Once we hit this fair value gap. We have another volume imbalance. You can see how we got rejected by each volume imbalance respectively. You see that one? I took a terrible trade, man. It's a learning. It's all a process. We really got to close above this volume imbalance. And another. See how we got rejected by both of them? Rejection. Right? Rejection. Like, I do know what I'm talking about. The problem is I sometimes don't have patience and I just do stupid things. I'm a human being, right? What can I say? But can I control myself after losses? That's what matters, right? And I'm proud of myself that I, you know, did actually control myself after this loss, right? Check the first percent for value gap and see the reaction area where I enter the long. $930, $931, $932. Yeah, man. This was the type of day where first percent for value gap is going to be a barrier to reject us lower. And it makes so much sense why that failed. It makes so much sense because first presented for value gap is delivering us lower. So yeah, guys. Yeah, am I sad? Yeah, but what am I more proud of the fact that I didn't do something stupid? Yeah. That's a lot more important. Look at the volume balance precision. Okay, I'll add the volume indicator. Yeah, because on one hand, this is the first presented for value gap. On another hand, it's that new day opening gap. Let's go, Medbach. Dude, I'm so proud of you, man. I'm so proud of you. Let's go. You take this, the break of structure for value gap. W, Medbach. I'm proud of you, bro. Good work. So once again, guys, one thing I'm realizing about the first presented for value gap is, you know, it's a 1 minute gap. What a lot of time you can do with the 1 minute, line it with the 5 second. Since the first presented for value gap is a really nice P array, look at that. The 5 second change state of delivery. That's crazy. You guys see this, right? First presented for value gap. This is crazy. First, so 1 minute, obviously it can only be 1 minute, right? But first presented for value gap, right? What happens? We retest a 5 second change state of delivery. This is what I mean when I say you can align the 1 minute with the 5 second, right? Look at how precise this is, right? 5 second change state of delivery, inducing all these highs. And then I wonder if we went down to the 8th standard deviation. Measured from body to body, we go down to the 8th. Guys, this is what I'm saying. Like, people underestimate, like, just like trades you would never even think of. Genuinely. Because align since the first presented for value gap's a 1 minute gap, you can align it with the 5 second. Genuinely insane, man. And also, why does this make sense? Why does this make sense? Well, first of all, observe the fact that there is, I think there's SMT. Maybe there's not SMT. But this is why I don't care if I lose, because all you need is one trade like this where you scale out all through here. All you need is one trade like this, and you've made back 2 weeks worth of losses probably, right? All you need is one trade like this. So does it really matter? Does your loss from last... That's why I only do one trade a day, or only one loss per day, because that means I'm out of it. That means I'm not trading well. If I take a loss, it means I'm not trading well. If I can just have one day where I'm super locked in and catch something like this, bro. Like, think about if you can just lock in for one day out of 2 weeks and just not be dumb. If you just lock in for one day and not be dumb and catch something like this, you make back all your losses within 2 weeks. That's why I'm not going to care if I take a loss. That's why I'm going to be okay when I take a loss. Obviously, I'm scaling out, so it would not be 8R, it'd probably like 4R, right? But still, if I can just have one day where I lock in, check out the potential of this, right? So, yeah, I don't care if I take a loss. I don't, because you can make it back so easily as long as you just don't tilt. As long as you don't tilt. That's the only way you lose is if you continue trading after that loss. For me, at least. Maybe some people can have 2 losses. Personally, I've found that if I do a second loss, it's going to lead to a third trade and a fourth trade, and it never ends up well. It never ends up well for me. So I just only do 1 loss because I just find that means I'm out of it. But like I said, if you can just do one of these trades, man. So what? One day at a time, guys. Let's just keep getting better, right? Actually, technically, hey, I'm new here. Can you tell me what kind of strategy you use in a nutshell so I can know the context of the stream? Yeah, I'm after 1 loss, I'm done, dude. I'm always done. Yeah, I'll give you some back. I'll give you the basic rundown. Okay. So 10:07. Just give me a second. I need to write this down. Flow state retest 1 minute 5 second 1 P FVG. Okay, I'll give you the basic rundown. So Anjad. So basically the market, yeah, I trade on price action. So the market moves in 3 phases. It moves, it's going to range accumulation, and it's going to manipulate, and then it's going to distribute. This is how the market moves. So our job as traders is to get on side with this distribution. So the way we do that is there's multiple ways. Yeah, bro, you really will. You really will. Just stay around here and keep watching these streams. So the way you get on side with this distribution, right, is so we're in a range. We're gonna sweep out lows. I might not be explaining this super well, but this is the idea. Just take a screenshot of this, right? We're gonna sweep out lows into a higher time frame key level. Higher time frame key level, like this. So this could be like a, let's say this is a 1 hour for value gap, right? 1 hour for value gap. So then we're looking for, if it's a 1 hour for value gap, we're looking for a 5-minute change in state delivery. If it's a 4 hour gap, we're looking for a 15-minute change in state delivery. If it's a 15-minute for value gap or 15-minute key level, we're looking for a 1-minute change in state delivery. So bang, right here, when you get a candle body close above an old high, that's a change state delivery, right? So now we enter on a retest of that, and we get onside with the move for the day. And you can project out this move. You can project out the manipulation of this move here, like this. See how we go to the second standard deviation, and then we go to the fourth. So I'll show you an example, right? So, here, let's see. Yeah, let's find a good example. I don't know if there's any good ones around. Here's one. Actually, I don't want to use that one. Sorry, I really just want to use one that's good. Well, there was one earlier, right? Okay. Honestly, just watch that flow state. Watch the video on market maker models. Let me tell you how I trade. If the market goes sideways on a support, that means it's creating a buyer's trap and will fall soon. It creates liquidity under support, then falls to sweep. Yeah. I mean, yeah, the market moves in accumulation, manipulation, distribution, bro. So if it's in line with that, then yeah, then you're good. Like here, right? This is a perfect example. Market consolidates. We get a sweep of these highs into 5-minute gap. Yeah, we probably do the same thing, bro. We probably do. 5-minute for value gap. So accumulation, manipulation. And then, since a 5-minute gap, we're looking for a 30-second change state delivery. So we drop down. Where's our 30-second change state delivery? We get that right here. So check out a couple other things, right? Note how we, from the high to the body, note how we tap OTE, right? This is the sniper entry right here. And then we also backtest change state delivery. So then measuring out the standard deviations, you can see we go to first, second, third, perfectly, by the way. And now we're on our way to the fourth. And watch how we hit the fourth. We're going to hit the fourth here. Probably. I don't know. But that's essentially what you do, right? Enter on that change state delivery. And yeah, observe accumulation, manipulation, distribution. And you could even enter on OTE here. See that? But yeah. But I have multiple different ways to enter, right? You can also enter on a liquidity sweep. So once again, liquidity sweep, so a sweep of external liquidity. Probably. So you can enter on liquidity sweep, break of structure, right? Here's the break of structure. Break of structure, and then fair value gap. So you can see fair value gap right here. That's called the 2022 model. So liquidity sweep, break of structure. When we break out a swing low, fair value gap, and you can see this also works out, right? You can literally just enter on a change state delivery, and you can enter off an inverse fair value gap. So for instance, like when we inverse, let's see, like maybe like you wanted to take this inverse fair value gap where we inverse this gap. Yeah. So I'll either enter on one of three things or one of four things. So inverse fair value gap, right? So once again, right? Either. So I'm looking for accumulation, manipulation, distribution, and then I'm looking for one of four ways to enter. I'm looking for an inverse fair value gap. I'm looking for flow state. So high time frame PD array aligned time frame CSD. It could be just a regular 2022 fair value gap, or it could be just a regular change of state delivery if I have conviction. And I'm just looking to get on side with AMD using one of these four entries. And flow state and change state delivery are like basically the same, right? But this is essentially what I'm doing. Hopefully that makes sense. Kind of hungry. All right, 17 more minutes. I'll be right back. Alright, I'm back. Dang, bro. New Day opening gap just slapped the price in the face. Holy crap. You see this, guys? You see this New Day opening gap? I'm honestly wondering, so I'm actually kind of curious. Can we use New Day opening gaps? We can obviously use New Day opening gaps as a PD array. We can obviously. So we would want to look for a 1 hour chain state delivery off of a New Day opening gap. So, see, that doesn't make sense because there's not a 1 hour chain state delivery at all. So the volume balances are kind of strange because even though it's a New Day opening gap, 1 hour chain state deliveries, it does not seem like the aligned time frame. Clearly. This looks more like a 1 hour gap. So this is something that I'm learning right now, is New Day opening gaps are honestly like a 1 hour PD array. You can see how this looks like a 1 hour for value gap, right? This looks, New Day opening gaps honestly look a lot more like 1 hour PD arrays than they do daily, right? Like 1 hour PD arrays than daily. So this is just an observation from the market. As always, market's the greatest teacher. So, yeah, I would probably say use NDogs as 1 hour PD arrays because if we go down to the 5 minute, so yeah, I'm gonna honestly align the 1 hour with, or the 5 minute with NDogs. See, that makes a lot more sense all of a sudden, right? Might even be lower time frame than a 1 hour. It might even be like a 15-minute PD array. It actually could be like a 15-minute, maybe even 15-minute. Let's see if 15-minute works better. That's so interesting. So NDogs might be 15-minute PD array. I'm at break even, up 300 now. Dang, Javier, let's go. Okay, yeah, this makes so much more sense. NDogs definitely gotta be 15-minute PD arrays. Because when you align it with the 1 minute, this fits so much better. Yup, this makes so much more sense. Oh my gosh. NDogs are 15-minute PD arrays. Nice, man. So NDogs are not daily PD arrays, guys. Lesson learned just now from observation, right? NDogs are not daily. They're definitely not daily. They are 15-minute PD arrays. And I can just tell that because, you know, the market's the greatest teacher. And I can clearly see that this New Day opening gap aligns with the 1 minute. Clearly. Once again, the market's the greatest teacher. It's going to tell you everything you need to know. This is so interesting. Learned something new again today, guys, right? So I wonder what kind of PD array a new week opening gap would be. And once again, guys, OTE slapped right here. Jake trades at OTE slapped. Let's go, Javier! That's awesome, man. That's awesome. One, two, three. What did I say? Who was talking to me about this? Anjed? Dude, what did I say? To the fourth, to the fifth. Max extension in between the fourth and the fifth. Standard deviations, right? Max extension. So we might have a reverse off of this. What time is it? 9:04? So we got 10 more minutes. So interesting, man. You guys see what I mean? Like, I thought that NDogs were daily PD arrays, to be honest, but they're definitely not. Now, maybe we need to go through more examples because we only have one to go off of right here. See, every day you show up, you learn something. I don't know if I should name it after myself. Maybe it's better for just flow state OTE. Let's type OTE. Yeah. I think you can trade it. Like, obviously, this is a sell model. Like, I think all price action is tradable besides, like, right when news comes out. But the issue is, you know, experience, right? Certain price actions harder. I really thought NDogs were daily PD arrays, dude. So, 10, 16, flow state, retest, 15 minute, 1 minute, using an NDog. I wonder, I'm wondering, to be honest, so new week opening gaps, maybe they're 1 hour PD arrays. Let's try and find an example of a new weak opening gap. And we have 3 more minutes. So this is the last thing I'm going to look at. I feel like it kind of depends how big it is. Like if it's a bigger gap, you know, it needs a bigger aligned time frame change state delivery. If it's a smaller one, it needs a smaller one. It's kind of confusing, to be honest. So maybe the size, you know what it might be? Like the size of the new week opening gap determines what time frame of PD array it is, or the new day opening gap. That might be what it is. Because obviously this one, right? This one's so small, this one'd probably be way better to align with this probably be best with the 5 second. So it's so interesting. So it might be just depending on the size of it. That might be what it is. You know what it probably is? I think it might just be common sense. Like, this looks like a 15-minute fair value gap here. It looks like one. So what I'm going to use it as a 15-minute. That's probably what it is, right? Just use common sense. What time frame is this this specific new day opening gap most closely aligned to? Well, the 15-minute. It looks like it's a 15-minute gap. Versus maybe a different one would look like a 1-minute gap. I'm doing good, Hyper. How are you? This is so interesting. This is going to require a lot more back testing to really actually know. But we should definitely look into it and figure out what time frame PD array end dogs are and new week opening gaps. How much time we got? Oh, it's 11:10. Anyway, one day at a time, guys. Let's keep learning. So yeah, 11:10 Eastern. I'm gonna head out. I gotta move on with my day. Took a stupid loss, but you know what? It is what it is. One of these days, I want to get to the point where I can take an end dog or take a trade and enter at OTE, enter at the chain state delivery, and then ride both to the 4th standard deviation. Like one of these days, this would be, I don't know, it'd be so cool to be able to do that, right? To be able to enter here, and then ride both to the 4th. One day. But I am going to end the stream here, and yeah, let's just keep getting better.